3 minutes. Test, test, test. Okay. Like I see something coming through. You guys can hear me okay on Discord, right? I think there's a little bit of an echo, but yeah, good. Excellent. Fantastic. Alrighty. All right, let's give you guys some easy listening.
Believing that he's an animal he thinks he has the right to kill.
Let's start getting this thing going. What's up, guys? In the Discord, give me, the music was going to skip because of the way that the voice meter is working. So give me a yes, no, are we good on sound? Let me bring up my chats for YouTube and bring it up for TradingView as well. Welcome wherever you're joining me. Got a lot of people in the Discord. Man, What a crazy, crazy week. It's been fun. It started off kind of scary on Monday, as these things are. I think they're playing games. I think they are trying to get people out of their lawn. But man, what about that face rip here at the end of the day? Making my long back here at 10 a.m. seem like a silly thing to take profit on. But I just happen to not be watching on this pullback. I want to go into this. I'm actually going to show you something really cool today about playing these reversals. This is the kind of thing that somebody would sell as a course, but I'm just happy to discover it. I've known about it for years. I'm going to show you how it caught the bottom of Bitcoin back in 2018. Once you see it, it has to do with Ichimoku, and I'm going to open the books and show you guys that. If you have questions on the Discord in the chat, make sure you put in the just chatting. And thanks, Stone Pilot and Trading View. Ask your questions. I want to know how you guys' week has been, actually. I got to say, my month is not good yet, but my week has been good, both in terms of the account, the portfolio, but also there's some cool stuff. All of a sudden this week, TradingView reached out to me, and they must like what I do because they've invited me to be on a panel in March with their general manager at the Money Show Expo, which I used to go to back when we went to things outside the house. You know, back in the before time, the BC before Corona. I've gone to those money trading expos before, and so they're actually pretty fun to hang out with people. A lot of different trading educators and stuff will be there, but I'm looking forward to that. And so let me bring up my notes. I got a lot of things to talk about. I also want to talk about the FUD around crypto regulation. We're going to look at some of the things that are coming out of the pipe. It's all rumors right now, but a lot of stuff to cover. Since you got to go, Ant, why don't you chime in? Tell me your thoughts for this week. Hang on. I don't know if he's coming through or not. One second. I got to check the sound here. So
Laura?
There we go. Okay, can you guys hear him? I just heard you.
Hello?
I hear you.
Okay. Discord can hear me anyway.
Yes, good. All right, go, man.
Hey, that's cool, man. Congratulations on that invite with Trading View. That's a big deal.
Yeah.
Well deserved. But this week was it was a little crazy in the beginning, like you said, really scary. I think what we kind of knew, but we didn't feel that way from the beginning. What we kind of knew was that until they make that lower low, you kind of had to give it the benefit of the doubt that there was going to be some kind of at least a short-term reaction, short-term rally. I mean, I know we're still within that range, but you got the weekly chart up here, I think. But we ended up with a nice green doji candle on the week, which was a better outcome than I think we thought we were going to get coming off of Monday.
Yeah, Monday was scary
to trade.
Monday, I had marked off the weekly levels back here, which was the halfway point of this rally, but it really, really came down and V-bottomed off of the May all-time high and the July launch point right there. I mean, that's basically where, if you go down to the lower time frames and you look, I mean, we came down there on Monday, got everyone scared to death, and then just ripped. And then, of course, played games for the rest of the week. But, yeah, this has been an interesting week, isn't it?
Yeah, very interesting. And it also kind of goes to show that sometimes, especially if you're a swing trader or within reason a swing trader, and even if you're a long-term investor, or more especially there, that you got to kind of wait to see how the day plays out or the week plays out. And sometimes, I know there was someone in the Discord today that cut their losses on some stuff kind of at the bottom of the day, and I'm sure at the end of the day now they're regretting it. I mean, the fear is always that it's going to fall through the floor, but I mean, man, if you held on through Monday, through Tuesday, through Wednesday, through Thursday, you didn't sell, this was the day to let it play out. And just kind of goes to show, if you have a longer time horizon, like less than a few days, sometimes you just got to wait to see how the auction process for the day or the week ends.
Yeah, I think you're talking about our good mutual friend. He puked his Tesla, and honestly, oh, you too, Jen. I mean, getting out of Tesla right now is actually the smart thing. Now, that's not to say that I'm doing the smart thing. I'm sitting here just kind of. I'm really I'm worried about Tesla because it's such a big meme, and I don't want to end up like these guys. People that have been holding on to like something like AMC, the meme from last year, because they think it's going to pop, or all the others. I'm going to talk about some of those, like Hood and everything like that. I mean, but it's
It
Tesla.
could keep going, Tesla for sure.
Do what?
It could be the market that's pulling Tesla up a little bit today. I mean, it wasn't exactly rocketing up
Yeah.
today, Tesla, but it held where
Well,
it should have held anyway.
so they had earnings, and the earnings beat by a pretty big margin. It's not just a little beat, but they beat, and then it tanks the next day. And so, explain to me how fundamentals are supposed to matter. I don't see it.
Did anybody say they were supposed to matter?
Say again.
Did anybody say they were supposed to matter?
A lot of people think that fundamentals matter. A lot of people really, it mattered for the better part of the 80s and some of the 90s until the tech boom. But then I think they kind of changed things for the tech boom. I wasn't really conscious back then. I was just a teenager, but it's hype. It's hype, and man, that this is regret. But when it came up here on the 3rd of January, I'm going to make a video about this. I didn't want to take short-term capital gains, and I wanted to own Tesla as a company. And so now here I am sitting here bag holding, and I don't like it. I don't like it at all. And I just worry that
Could have
I'm
owned
not.
a Tesla.
Huh?
Could have owned a Tesla instead of just owning Tesla.
You're damn right. No. Honestly, I really wanted to. I really wanted to say, okay, I'm going to invest in Tesla first, and from these profits, I'll get a Tesla. That was kind of in my head there, but I don't. I don't think that's gonna. I don't know. Who knows? We got a whole year left and whatnot, but it's interesting. But the thing that worries me is, how when people puke their positions at the lows of the day, or that kind of thing, it's not because they're hunting your stops, the lizard people. It's because you are the market. And I just worry that if I'm bag holding, I'm not alone. I'm definitely not alone when it comes to Tesla. And there's going to be a lot of bag holders that are going to be, coming in like on Robinhood and saying like, well, this stock can't go lower. I mean, it's not going to look like this, but it's one of those things where you have to use your imagination. How far can this go? I mean, you can't. The worst thing you can say is, "Oh, it can't go any lower." And so that's why I'm worried that Tesla.
You don't want to be the liquidity here.
Say again. You
don't want to be the liquidity.
No, don't want to be the liquidity. But I think Tesla's going to be around for a long time. It depends on how big of a position that you have. I mean, it's really size is what kills. Size kills. But as far as going back to just the market, man, we're still not out of the woods yet. We're still not out of the woods yet. In fact, we really haven't broken this range. We closed above the rally from Monday, but yeah. And I've been watching very closely to see if the correlation between Bitcoin and the stock market has continued. Let's match them up here while I'm talking about it. So let's clean up some of the indicators that I don't need. And I think a lot of people kind of filtered in now. So if you got questions, guys, I want to talk to you. Tell me how your week went. Oh yeah. No, I'm definitely not talking about you. Everyone did the same thing, man. We had a guy in the chat this morning. Was it this morning? That was it yesterday? I think it was this morning, and they came in at 9:51, bragging about a put that was printing for them. They had like an 800 put, and it went in the money, and they felt the need to say something in the chat. Is he in here? Is he in here? I think he should be. But I said to him, not to detract. I mean, that's a great trade. It's great. I don't think he's in here, but what I found when I'm trading options is if I look at my P&L and I am really happy, that's the highest that option will ever freaking be. Options are so determinant on emotion, and it's happened so many times before that I have to point that out to everyone else. If you have an option position and you're just really happy about it one day, if you're long an option, that's probably the best you're going to get, because something's pushing that thing up, some emotion, and you're just going to have time working against you. So it doesn't matter what you think it's going to get to, just do something. Don't sit there and pat yourself on the back and post in Discord. If it's as Wall Street Bets says, if it's good enough to screenshot, take profit. As I've always said, if you're bragging, you should be taking profit. So, yeah. All right, back to what I was saying. The Bitcoin. Let's match these things up. I want to see this correlation go away. I want them to be two completely uncorrelated assets. This is the ES up here, and then let's see about getting the SPY matched up. Okay, so the low of today was here. All right, let's look at the price action for today. So on the top is the S&P futures, and on the bottom is Bitcoin. And unfortunately, they both bottomed out at the exact same time, 7:30 today. Now, the price action here on Bitcoin, it looks like it dipped a little bit harder back overnight. No, in yesterday afternoon. Unfortunately, they still look about the same instrument. So that still continues. I can't wait till they break off into something else. So that still persists. Let's take a look at some of my notes for this week. All right, so I wanted to. I made this point this on Monday of this week when I made that. What was the 25th? It was like Tuesday, maybe. Here's what I'm looking for in the markets, and unfortunately, like I just showed in the Bitcoin example, they're all moving the same. And so, if you want to look at Bitcoin, you're going to know what the stock market's going to do, and vice versa. I'm not going to say which one's leading the other. They're just working on the same crazy person psychology. And so, if we're going to look at when this correction is over, then I think you'll pretty much know as well with cryptocurrency for at least the time being. What I really want to see, and I talked about this in Discord this week, is the pullback. So we had the correction, or we're in the correction. Okay, we made a bottom. It wasn't exactly where I thought it was, but it was right here at this inflection point. I thought it was going to be somewhere in here, but no, it actually was the May high to the July launch point. That's where it made a V bottom this week. Okay, let's take for granted that the market undergoes a minus 10%, give or take, pullback once every 2 years. We didn't get it last year. This year we haven't. I'm operating under the thesis that this is it. Why do I think this is it? Just my opinion. There's nothing really bad happening. What's bad that's happening? I mean, yeah, we got inflation. Yeah, they're going to raise interest rates. That's exactly what tanked the market back in 2018. This year, I came into it thinking that this was going to be a repeat of 2018. It is, but just like history doesn't exactly repeat, it rhymes. It caught me by surprise, I'll admit. It happened a lot sooner. I thought we would get a big parabolic run, a big rally to begin the year. But instead, that rally was just 2 days. It was just the 3rd and the 4th, and even then, kind of muted. So now we got the 10%, which actually, if we measure on the SPY, we got 12%. That's what you want to see, expect. So I'm looking for this to retrace to 450. And it makes a lot of sense. It brings us to the low of of December, and it's a nice inflection point. This is what I want to see it do. I want to see what happens at that level. because that's going to tell us a lot going forward. Here's what I mean. If you go back and look at COVID, the COVID crash, the one that we're all very familiar with, let's just bring it up to here and then bring up the cheat code. Okay. So we topped out February of 2020, and we had a pretty significant 15% move. Okay, so it's more than 10%, but that's just the general guideline. 10% or more, that's considered a correction. You get to crash when you get to 30 to 40%. Those are the big ones. And I'm sure there's a lot of people out there that are thinking that this is going to be the big one. We talked about Meet Kevin this week. He liquidated a lot of his stuff, stocks, crypto, real estate. That's him. I wish him the best. I don't think that you should be getting rid of the real estate, but anyway, that's for his estimation. He thinks that he's going to get these things like Tesla lower. He may actually be right about that one. We'll see. Anyway, this correction that we had, it did a pullback. It pulled back to about 312 on the SPY. And there it sat for about 2 days at the beginning of March, March 3rd, March 4th, and let you kind of read the news, see what was coming out of China, check your positions, maybe put on a little bit of a hedge, do some things. You had 2 days worth in that week to react to this. So you may have been taken by surprise, as a lot of people were, from the top all the way down, but now you have a chance to reflect and see what's going to happen. Okay? And of course, there we know the rest is history. We went down that full 30% crash, but we got that pullback. And what price did around that pullback was really, really key. So you had a chance. There was no reason to go and dump all your positions here at the low. You had a little bit of a better shot to get it here. Of course, let's assume we have a crystal ball. But the point is, if you're patient, you could take a little more time to think about how you want to play this down move. In the case of 2018, the one that I was very familiar with, you had from the top, January 2018. This one hurt me. This was my worst pullback in my career. This month is my second worst of my career. This was the worst. So I'm doing better. I'm clawing it back though this week in futures. I'm grinding it. I'm really optimistic about my skills. So we'll be okay. This was a 11% pullback. Not even as bad as what we got. We got 12% now. And it did a pullback as well. And when it did, it blew past it and consolidated. We did a second test here, got people a little more scared. And then the year went on to make a new all-time high. This is what I really expect, and I've expected since the end of 2021. We're going to make a higher high on the SPY this year, but it's not going to be like 2021. It's not going to be up and to the right because, again, 2017, up and to the right. January, take out all the super bullish optimism. And then, because we had that removal of all the super house hope, whatever you want to call it, the hopium, you had a pretty crazy event at the end of the year 2018. This was an option buyer's paradise. And I, through this process, was able to make back my losses for January. It took me until October, this crash right here. And then this last December, Santa Claus anti-rally. Actually, it did come with Santa Claus right there on Christmas. It bottomed. But this right here, this last move right here put me up on the year a lot. So I'm not saying the history will repeat, but this year is going to be a trader's year. This is going to be a very interesting year. It's not going to be easy for buy and hold. You're going to have to get a little creative. But again, on this move down, once again, it did a 11% correction. And then on this move down, the reason I was able to capture that last bit was because you had situations. I didn't catch this one right here, but I did start finding weak stocks and taking out buying long puts. And of course, got a little bit of, and then a little bit of, and then finally it was like, okay, 2018 was one of the best years ever. So this is not exactly going to happen the way it is, but all this excitement has got the VIX off of its lows, the below 20s. That's not very good for either option sellers or option buyers, but this is actually getting into a very interesting year. And you want volatility. If you're a trader, you make money on volatility. You want to know the worst year to trade? The worst year to trade was basically that 2015. Where was the Volmageddon? Armageddon. Okay, yeah, it was. That was what the 2018 was based on. It wasn't just the tapering. Well, the tapering kicked it off, but basically with the year that we had in prior 2015, 2016, everyone got lured into this false sense of, well, there's never going to be volatility again. Let's look at the VIX. Where are we? There we go. Right. So this was actually a very tough time for option sellers, especially when you're below 10 on the VIX. There's no premium to sell. And so, but that all came to an end spectacularly in the Volmageddon, where you had, what was that product? Volmageddon ETN blow up. This was, Tyler, do you remember what the instrument was? You just said you remember when this was. It was XIV, the inverse VIX short term. So I know how you guys love your SARC, your inverse Cathie Wood ETF. Well, there was a index VIX. Excuse me. There was an inverse VIX that looked something like this. So EIX chart. Oh, excuse me. XIV blow up. Yeah, there we go. Google already knows I want to look at that. I've lost 4 million, 3 years of work. Yeah, because it just, yeah, there you go. This is the chart. So basically the press and hold. Okay, I don't have time for you. This may not be the same instrument, but it is the chart. That's appropriate. So where are we? There we go. So this was actually a product that people bought and could put into their IRAs, their 401ks, and it just kept going up, 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 up. Look what great returns that was. And normally when you have like a bubble crash, it will come back to, let's say like the $40 range, like really kill people. But to lose absolutely everything, that's what happened. The product stopped trading. They discontinued it. Gone. Just do not pass go. Do not collect $200. Do not get any money back. It was destroyed, and it comes from people just getting very complacent in the idea that the market only goes up and that there would never ever be volatility again. Well, that was 2018. This time it's different. This time the market's just throwing a tantrum because rates are going to be, interest rates are going to go up and the cheap money is going to evaporate. But really, again, going back, what really bad is going on right now? We're not going to invade Ukraine. That's not going to factor into it. There's nothing really to tank the market 30, 40%. There's not a mass panic. If you go walk outside today and look on the street for people that don't trade, believe it or not, if you're watching this, you are a special person that really watches the market every day. Not everybody watches the market every day. the vast majority of people, maybe they know their 401k is down 7%, and they're like, oh, wow, that sucks. But they're not that worried. They're going about their daily lives. They're going shopping. They're going out to eat. The economy is still going, despite what gold and silver buyers want you to believe. So that's my general thesis. Things are fine. Maybe there's flames in the background. Maybe I'm living in that meme right there with my coffee. But I think the 10%. I think this was our 10%. And we'll know when the SPY pulls back to the retracement I'm looking for, 450, what it does there. If it holds and we start to come back down, then we can get a little nervous, but not until then. So that's what the market's doing. And, for those that, want to, I got a special thing to show in crypto. So, yeah. What do you guys think? Let me read some of the chats here. What do you guys think? Do you think this is the 10%? I used to have a Bitcoin traders meetup, and every week we would do a poll. And I think I need to start doing that on the Discord. It'd be very interesting to have a poll at the beginning of the week, because what we do at every meeting was we would take a poll of where people thought Bitcoin would be by our next meeting. Sometimes we do it 1 month, sometimes we do it 2 months, but roughly, where would it be a month from now? And what was interesting was my hypothesis was proven true in the first few sessions. After about 5 or 6 sessions, we were 100% incorrect as a group. None of us were as dumb as all of us, basically. I mean, we take a vote, and people would say up, people would say down, and then we would log as, okay, like we had, 10 people bullish, 7 people bearish. The group is bullish. And then without fail, for at least 4 or 5 meetings in a row, we were wrong every time. I was really excited about this inverse indicator that I had developed, because I was going to go against the group every time. But the more data points that we got down to, I think after about a year's worth of meetings, we got down to about 70% wrong. Still a very good inverse indicator. So I think that'd be an interesting exercise to do, because as I think I just quoted him, as my friend John said, none of us are as dumb as all of us. And yeah, that's that. So where is the Bitcoin thing I want to talk about? Stop me if you guys want to look at something. I'm just going to keep talking about my stuff. So this really got me excited on this right here. Let me check and make sure. Are we still? Is my screen still good? Yeah. Okay. So I made this post here because, to me, technical analysis is an art form. I can't help but get excited when I see something like this happen. Let me just draw it out for you right here. So this is the move. Let's clean it up. We'll start from scratch. All right. So let's bring up the 30-minute. So when I'm drawing 50% retracement levels, I'm using the Fibonacci tool in Thinkorswim. Now, a lot of people, they spend a lot of time studying the 61.8, 38.2, things such as that. I've looked at all those things. I just don't see it as being as effective as simplicity. Like, for instance, like if I do the 50% from the high that we made on Thursday of last week, January 20th, down to the low this Monday, we basically came back up to that level right before the FOMC meeting. I mean, we were just bouncing right up. I made a post about it. This was very interesting to me. And then, of course, what happened was Fed minutes come out, price on everything, stock market, crypto spikes up, takes out people's longs above here. Let me get rid of those fibs I don't need. Now, why does crypto move with the Fed? Again, they're all unfortunately moving at the same pace. And then this was a good sign to get short right here. And then I actually streamed it, and watch this in real time. And then what's funny is as J Powell was speaking, the market just kept going down. Well, if we take the low that we made on Monday up to this high right here, basically the bounce to the FOMC spike, we get another 50% retracement. And sure enough, as soon as he stopped talking about what time he stopped talking, somewhere in here, that's when the markets actually turned back around, right on the minute, as a matter of fact. But crypto continued, Bitcoin continued through the night, got back down to that level, and then hung around. There's a good little reversal setup right here. Boom. See how it did this little number right here? Pew, ping. Let's zoom down a little bit. Right there. That, I love that. That's just amazing. And then if we get a little more cute and we mark it from the FOMC back to there, boom, another ping right off that 50% level. I love this stuff. I love it. I love it. I love it. People that say technical analysis doesn't work, they're either using the wrong one or they haven't done enough time to study it. But that's why I like sharing this with you guys, because look, you can be a fundamental investor. You can hodl. You can invest in companies that you like, but that stuff killed me this month in stocks. Technical analysis is the way I'm going to go. In my opinion, there's no difference between technical analysis and fundamental analysis from the standpoint of it's a narrative. It's a valuation of that company that you think it's worth, and that's where you're going to buy it, and you're going to hold it until it gets to whatever. If you want to pick a Fibonacci retracement, if you want to pick a 200-day moving average, if that's what you want to look at, that it's in your head that that's what you're based on, that's what matters. It's because you're going to look at that number and you're going to say, okay, well, if we hold that number, I'm going to stay in. If we go past it, I'm going to do X. And that keeps you a little detached from your emotions. And man, this week, talk about emotions. Talk about emotions. And that's what gets you. That's what really gets you. You got to wrap your trading or your investing around some philosophy, some rules. And one of the rules that I go by is the 11/3 reversal. We're gonna talk about that here in a second with futures. So YouTube says I have sound issues, but Hien says it's fine. So no one else is really complaining. I'm using an Epson thing. No, I don't think that's an Epson thing. Are we good with sound? All that kind of stuff? Okay. All right. Good. Glad to see we're fine. All right. So I really want people. I don't want you to do just things because I do them. I don't want you. But this is something that I know and I trust because it works often enough. Does it work 100% of the time? No, nothing does. But that's why you have your risk controls. If you just roll the dice on your preferred method of technical analysis, I am at the girlfriend's house right now, so I don't have my notebooks, but you can ask Darkside. I was going through my old charts that I have printed out because I wanted to remind myself this week where things have gotten a little crazy, what good setups look like. And I'm going to show you this right now. This is, let's start with the Bitcoin one first. So in my notebook from 2018, I have where I caught the bottom on Bitcoin. And I do believe, bear with me here. Let's see. Let me see if it's actually one of my posts. Hold on. That was 2015. Where's the 2018? I need to go back and take a look at it. But this was a can we see this one? Hold on. Yeah, it did. Okay, hold on. Wow, it's going to be kind of hard to see there. But basically, This was the 2014 high. It came up to 1,100. Ooh, wouldn't you love some $1,100 Bitcoin? And made a bottom and did this little reversal. I'm going to show you a lot closer here. So we're going to look at that. But this, I'll have to find it. But there was another one that I have printed out. Okay, I'll have to go back through and look. Let me do one more search. One of the reasons I really started talking a lot more on TradingView was because I am remiss that I have not, over the years that I have been talking about Bitcoin, really been consistent with posting my ideas about it. But the few I have are cool to go back and look at. All right, we'll do it manually. We'll do it live. Ichimoku. There's going to be a little lesson on Ichimoku and using it for Bitcoin. I want you guys to really pay attention to this. So back in 2018, no, it was here. So there was a big crash in Bitcoin. Okay, so this is on a daily. So 2017 high was here, and it slowly ground down over the course of a year. Never really got back above the daily cloud, which is why I like to look for that. And then there was this moment right here in November of 2018 where a lot of people thought this was going to be the breakout because the leverage longs were so high, but it was actually the opposite. And a lot of people got liquidated, and Bitcoin sold off from, again, one of these how low can it go situations. Well, it was off the high by 67%. Surely it can't go lower, says everyone that bought Robinhood stock. And instead it went down 50% more from there. So, yeah, but that's not what we're talking about. Down here, as price began to do its thing, you had this little reaction happen off of the 3,200. And what I've been watching for, both in longer term perspective and also short term reversals, is 50% retracements just everywhere you go. And if you look down with Ichimoku, all these lines, they're not moving averages. The reason they go flat is because they mark off those 50% levels for you. And so what you'll end up happening is you'll have these levels go flat. And then this would be what I would call a Kijinsen cross. Okay, so you basically had, we'll update that. That's more right there. There's our green line. This is where you have like your first reaction level. And that's what I've been, if you see me talking in the chat and I say reaction level, you're not going to Google it and find it, because it's literally just something that I've come up with to illustrate what I see when you have a big trend, it starts to make a reversal. This is what you want to see. You want to see price come up, make a high, and set you up at 50%. But if you're using Ichimoku, you can use the Kijinsen or you can use the Tenkan-sen if you want to be a little more quick about it, a little more aggressive. Good thing about TradingView is they have the 30-minute. Yes. Okay. On the 30-minute, back at that point, this is where you have an Ichimoku cloud pullback. Now remember how I'm looking for price to be bullish or bearish based on the cloud with the Chikou, the momentum, to be outside the cloud at the same time. So as long as this Chikou never gets in here, we're good. We're bullish. And notice how the flat part of the cloud on the 30-minute matches up. Now here's the 30-minute. Flat part of the cloud matches up with the 2-hour here as well. They're both taking that 50% level. And so from there, go in. You can either do I used to do this. I used to maybe take a stop in here and then play it up to here, try to get a 3-to-1. But nowadays, I just go ahead and say, okay, if it breaks that level, I'm fine. And then I'm going to look for a 3-to-1 up there. And so that right there was $3,200 Bitcoin, which was the lowest it's been since 2018. Now, that doesn't mean that that rally didn't have this happen to it, which again, I'm sharing this with everyone that's interested in cryptocurrency, because I think when people look back in history, they just look back over the last year and they think that crypto just goes crazy. But there's been a lot of things in crypto's history that if you're going to trade it, you need to take the time to do your homework. Use TradingView. Go back with this replay feature. Play out the years that you can. There's the ones that you have that has the most data is the Coinbase BTC USD. But what you really want to do is you want to go back to the index, the all-time history index that TradingView has. That's going to have data going all the way back to pretty much 2011. Go back and see how these things play out. This is how Bitcoin reversed after a big crash. It didn't just V-bottom. It got people in this trend, and then it tried to retest the low again. It got people in, it got people out. And it never looked back from that point in particular. Now, why is this important? Well, today we're going to go the 1 minute of the S&P 500 futures. This morning, 8 o'clock, 1 minute, bottomed out, set up that same pattern with the Cajunson, boom, and up it went. Hold on. Let's do something fun. 1 second. Way back, way back, way back, way back, way back, way back. Isn't TradingView awesome? I'm really happy they're going to be having. They're I don't know if did I say at the beginning they've invited me to be on a panel in March. Yeah, I did say that. So I'm really honored. I'm really honored. I just love their platform. I'm supposed to talk about markets and strategies. I'd rather just talk about how you need to use TradingView to share your ideas. All right, let's see here. 2 hour. Only drawback is I can't do this. Okay. Can we see it? Come on. All right. There you go. There you go. This is Bitcoin. 2 hour time frame. The 16th of January, 2018. This is this morning. January the 28th, 2022, on the 1 minute of the S&P 500 futures. Look, these reversals, these patterns, they don't work all the time. You don't need them to. You only need, if you have a 3-to-1 or greater risk reward, just put the below. If it goes below the bottom, you're wrong. Just give it a 3-to-1. Or if you have the stomach for it, hang on to it. Hang on to it. Hang on to it for a 13-to-1. How many times you got to be right if you get a 13-to-1? Or in the case of Bitcoin, just below the low. Don't need much more than that. Even if back in that time, and this is how I played, I of course took profits, because if you're up 10-to-1 on something, why don't you take profits? But let's just say that you left those Bitcoins on, you hodled until now. There's that retest. Almost brought you back to break even, but never took your stop out. 20, 60 to 1. How right do you have to be? Anyway, that's fun. All right. I love that stuff. I love it. That's why I do this. It's art to me. It really is. If you have questions, just feel free to ask. Otherwise, I'm going to talk about the bad news. The bad news, this is FUD. A lot of people disagree. But this came up in the news this week. The White House, Biden, he's not actually going to... Wait. It's been some conflicting signals. He's not going to issue an executive order to regulate Bitcoin. He's basically going to take charge of a mandate to get all the TLAs, the three-letter agencies, the SEC, the CFTC, that's four, the FTC, just all the little agencies that are full of unelected bureaucrats that want their grubby little paws on cryptocurrency, going to have them issue their regulations on cryptocurrency. One of the things that is coming down the pipe, and of course these are a little biased, but they happen to be my bias, that regulation on crypto is bad for it, is that Yellen, who, well, not Yellen in particular, but the, what is her role? There's so many. She's a Treasury Secretary, which is appointed by the president, is going to be given by a bill. Let's see. This isn't the right article. Sorry. They are, there's a bill that's coming down the pipe right now that's going to allow the Treasury Secretary to restrict companies, financial institutions, from any transactional category, which could include crypto. So basically, she's going to have the power to hit the stop button on banks being able to trade with X cryptocurrency. That's what the wording is going to allow. That's the worst case scenario. So we don't know what Biden's going to do. We don't know what these are going to do. But more and more regulations coming. And again, on my soapbox here, regulation is bearish for crypto. The whole point of cryptocurrency is to be decentralized, not censorable, not controlled by any particular person. You can't take it from people. You can't. You can have a court order saying they have to hand it over, but you can't go into their private key and take it from them through a court order. You'd have to go in their brain and pull out their password or their private key. That's been the whole point since the beginning. And all this regulation does is, where is that quote? Right here. I like this quote right here. Yet so is scrutiny of everything crypto then does, and taxation of every transfer, which means it won't be able to operate at the scale required to ever emerge as a day-to-day rival to state-backed fiat currency and their more efficient, untaxed payment systems. Do you pay taxes every time that you do a $10 Venmo transaction? Somebody buys you lunch and you Venmo them. You don't pay taxes on that. You don't have to report that. They're trying to make you report, I think, was it $600? But right now, you don't have to report Venmo, PayPal, all these things. You already, according to IRS guidelines, have to report every single little 0.00001 of whatever shitcoin that you have that you received when you had it, and pay taxes on what it was worth when you received it. Who's the football player that I posted this week who, hold on. Let me find it. Go back through the social media. Oh, while we're doing that, let's that's not going to work. See, open. No. Where is it? The NFL football player salary Bitcoin. So he took 50% of his 13 million that he gets in crypto. So I guess he took what is that, 6.5 million in crypto, and I think he. Oh, thank you, Jen. Yeah, so he, at the time that he got this, Bitcoin was at $64,000. It's now about half that much. So he has $412,000 worth of fiat value, but he's going to be taxed on $750,000. So I think he got cash. So this isn't exactly accurate because it says he gets half his salary in Bitcoin. So he's at least a little smart. He didn't go full YOLO long on it, but he's still going to owe a lot of taxes on there. Look, the tax code is not set up for cryptocurrency. It never has been. I don't think it ever will. At best, you can say that these boomers that are writing the tax code don't understand crypto enough. At worst, you could say that they are purposely making crypto hard to transact in, hard to tax and hold. I mean, DeFi, yield farming, I don't know how you guys are going to do your taxes. Holy crap. All the stuff that you guys do. Wow. Good luck with that. I haven't really gotten into the DeFi because of the complications along those lines. As was said this week, I really want to make Bitcoin great again. And to me, it's just my opinion, that means drug dealers buying pizzas. I really liked it when it was a niche little experiment, but everyone else wanted it to be mainstream adopted so that they could become personally wealthy while eroding this tool for human freedom. Oh well, we tried. You explain why the math is wrong. NFL players get game checks. Why can't I just have my hot takes? Why do you always have to say truth? Why can't I just have my hot takes, man? Why can't I just say things and you let them slide? No, I'm kidding. Thank you. He essentially DCA'd in every week. Well, I hope so. But it doesn't negate the fact that he's going to have to pay taxes on every time that he does. So he's better now, I guess, if he got a check this week and he gets US dollar equivalent in Bitcoin. Yeah. Okay. US dollar equivalent in Bitcoin. Okay. I understand. So he gets different Bitcoin as it comes along. I got you. Okay. So he is still paying the same taxes. So that picture was entirely wrong, and I shouldn't share that. Okay. Yeah, he's got a lot of Bitcoin now. Yeah. Odell Beckham Jr. He's sponsored by shampoo Head and Shoulders. Coincidence? I think not. Celebrities buying NFTs. Yes, actually, I will help you get a rock dollar. I have a lot of experience in farming the rock dollar. That would be 1 Ethereum. We'll do that in Ethereum, actually. Hold on. Sun's going down. This time of year. 1 second. This has been fun. We're actually getting up to the end here. Man, time just goes by. Did I get to talk about everything I wanted to talk about? Let's see. I never do. I always make these live stream notes and I never get to it because I enjoy talking to you guys. Oh, yeah. I want to make a note of this right here. So yeah, the if you notice the thumbnail, it's a Cathie Wood. She's on the Titanic. That was a meme. She bought things like Robinhood. This is a chart of it. She bought Coinbase, which I've always said was a mistake. If you're going to buy Coinbase, just buy cryptocurrency because they are going to live and die on what the crypto market is doing. And so if the crypto market is bullish, they're going to have a lot of people trading. They're going to be making a lot of revenue. If the crypto market is bearish, they're going to get absolutely slaughtered. And so why not just own crypto? Coinbase, horrible idea. I can't blame Cathie for maybe buying Robinhood because at the time it was an innovative company. It fit her investment thesis of innovative companies. But this is a great example of why you should never say it can't go lower. Really. Like, take a look at Hood and go on TradingView, go on your trading platform, whatever. Bring up the daily. Make a nice white background, not like this, so that you can print it out. And print this on your wall. If you're trading, this is what you have to do. This is your mandatory homework, guys. Take a chart of Robinhood and put it on your wall. And put in big letters, well, it's not a stock, but in quotations, this stock can't go lower. This is what you need to remember. I mean, the reality is at some point it's going to find a bottom. They almost always do. But that bottom could be at $6 and you lose half your money from this point. Now, there's going to be those that are, I believe in it long term. I don't care what price I get into it. Come on. Care what price you get in. Like, wait until you get that reaction that I was talking about. You know, again, 50% is useful in a lot of different ways. Like when you had this big run up right here, and the moment that this closed below it, look right there. It even, you come up, down it goes, close below it, boom, held the 50% on the upside, never looked back. Think about it this way. Half the people that bought it no longer have it. It lost the vote. It's going down. That's another use of it. Just 50%. But keep you out of crap like this, man. Fundamentally, I don't understand the picture for Robinhood either because I hate their platform. I don't hate. Hate's a strong word. Their platform is good for one thing, and that is having a well-recognized thing to screenshot if I ever wanted to post on Wall Street Bets, which I don't. That's about as good as its usefulness is. The way they chart your account P&L, the way that, you know, it's kind of useful. It's quick. But as far as doing complex technical analysis or any technical analysis for that matter, they have no charting platform. As far as doing option strategies like spreads, you can't roll spreads. That's a big failing. You just can't do anything on the platform. Like, there's so many better platforms out there. They have no competitive advantage. They just have a bunch of good, lucky marketing back in 2021 when the market was ripping higher. And a lot of those people are getting killed. Do we have that chart of when they announced their earnings and it was like the active users? Did I post that? Where's that chart of the active users for Robinhood? I need to post everything I want to talk about, but it's going down. And that's for last quarter. Last quarter, when the stock market was doing well and, you know, you still had Tesla doing some things and people People go crazy. Oh, another thing we watched this week that was really interesting. I don't have that picture on here. Was looking the day before Tesla earnings at the options. Tons and tons of one volume. 28th of January today expiration. I think the most popular call I saw going across was 1,200 calls that people were buying right before earnings. There's still degens out there, a lot of them. And yes, they're trading on Robinhood still, but eventually they're going to run out of money and eventually they're going to get frustrated. And the only people that are going to survive this year's market are true traders. It was bound to happen. This was easy street. The people that thought trading was easy, they got to go. It always happens. It always happens. Robinhood has the worst traders, most money for their biggest clients, revenue. They sell data, and I'm sure that they let people front run their trades because, people are out there trading options with dollar wide spreads. It's $100. And if they throw in a market order, which they do most of the time when people buy options because, I want to buy one airplane ticket. AAL. What is it? American Airlines? Yeah. I want to. Oh wow. Okay. I want to buy an airplane ticket. $50 call expiring next week because it's like I don't know. I mean, we'll be more reasonable. I don't have the option chain up here right now. What's a quick website to look up option chain? I don't know if it's going to have spreads or not. Oh well. I'll look that up because I think I want to do a video on this year is going to be an option trader's year. Seriously. Real quick recap. Today, I posted about this this week. Yesterday on earnings. Comcast, the reason I got really, 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 really interested on Comcast this week. Let's bring out my spikes. So on the weekly, remember what I love? I love the 50% pullbacks, especially when they match up with Ichimoku. So the COVID low, this is a weekly of Comcast. We had a full pullback to the COVID low to this high right here, these past highs of January, bing, right off of it. And then you can wrap your risk around a trade off this morning. Boom. Right off of this, the Tinkinson, which is, if I'm using the spike indicator or the retracements, it's basically the 9-period Tinkinson. And what that trade is going to look like. Now, I did shares and options. But if you're just doing shares, there's your 3-to-1, which on the daily, that, you don't even need to get back up to the high. But also I went all the way out to the summer for 55. So we'll see how that plays out. So that I'm making it a point to do options a lot more because ExxonMobil, that's an option. Still have a few of those. Earnings is coming up next week. So, okay, it's Tuesday. Whew. Going to close those right before earnings, no matter what, because you're going to get an IV crush on that. Options are starting to look better this year. Spreads are tightening. IV is up. The other one from this week was CSX. They had earnings, again, brought them down to a 50% retracement. And IV is still up there, so the price of them has stayed up, but that's looking up pretty good too. So I'm making it a point to actually take, for everyone else's benefit, mine too, financially, but more just to show people what longer term options can do. Options out past 60 days, 3 months, even more. Basically, the next earnings cycle, because you want that movement. You want to give enough time, but you also want to get that IV lift that comes right before earnings. And so I'm making it a point to not trade I will still trade shares, but to start taking some of these longer term multi-month options to show you guys how powerful it can be. if you don't think, no, you know that they can be winners. It's just most people are too damn impatient. They're too damn cheap and they're too damn impatient. What do you mean? You got to wait 3 months to get a return on your money? No, I'd rather just buy 2-day expiration 1,200 Tesla calls and, yeah. Good luck. Good luck with that. Good luck with those weekly options if you don't want to listen. But there's a lot to be made out there. I'm telling you, if this year is like 2018, this is going to be an option trader's year because that volatility is just going to go. Let volatility get low. Let the VIX get back to low. Let price get to a support or resistance. It's going to be very interesting. It's a very interesting year, and I'm excited. I'm down on my portfolio. I'm sure a lot of people are, but it's a challenge for me. It's a challenge to grind it back. Yeah. I usually end up doing this every year, basically. Basically, January, I tend to take it easy because I end up screwing myself up because January is a crazy month. And then I spend the rest of the year. Oh, well. I am who I am. All right. Any last questions or comments before we close it out? Thank you all for joining me. Thank you all, my close Discord folks. Make sure, plug it. Do the like, share, subscribe that the algorithm likes because I do want to get this message out to more people. I think this is valuable. It makes me money. I want to make other people money. I want to get them away from the hype and the bullshit out there. So join the Discord. Join the conversation with me. I just want to talk to you. I'm not going to charge you. So that's my plug. Let's check. You're welcome, MJ. Thank you. Thank you guys for showing. I can because I'm not worried about being monetized. I can say bullshit. Oh, TradingView's not going to like it? We're all adults. We're all adults here. All right. Thanks, everybody. Have a good weekend. We'll see you Monday. Oh. Hey, come here. Come here. Show your face. No, come here. No, don't be scared. Hey, come here. Before I close it off, hang on. I got something to show you. I got to show you my friend. Hey. Come here. Good boy. Yes, good boy. Good boy. Good boy. Come here. Yes. Can you see the Frenchie? This is Frenchie. This is Tay Tay.